Hello. Today we're going to look at the three main depreciation methods: straight line, double declining balance, and activity-based. We're going to use exercise 711 that's in your textbook. This is a delivery company, purchases a van for $36,000, 4-year life. Van will be worth $6,400 at the end of its 4-year life. That's an estimate. During the 4-year period, the company expects to drive the van 148,000 miles. Again, that's an estimate. Everything related to depreciation methods is based on actual cost and estimated life and estimated usage. Okay, so straight line, easy peasy. Okay, depreciation expense is the amount that you paid for the van minus the 6,400, the salvage value, residual value, whatever you want to call it, what you think the van will be worth at the end of its 4-year service life. So 36,000 minus 6,400 gives you a depreciable cost of $29,600. Divide that by the 4-year useful life, and annual depreciation is $7,400. It's very easy, just the same amount every year. Okay, declining balance. This one is a little tougher. Okay, with this one, we're going to use the beginning book value. We're not going to subtract the residual value, and we're going to take twice as much as straight line in the first year. Okay, that's the double part. Okay, so the rate is a percentage, or you can do it as a fraction, whichever makes more sense to you. Okay, straight line is 4 years. Double that is 2 years. Okay, 50% rather than 25%. We take that amount of depreciation in the first year. Okay, then it shows that the accumulated depreciation is that amount because that's what we've taken so far. The book value is also $18,000. It's the remainder of the 36 minus the 18,000. That book value is what we use to calculate year 2 depreciation. Okay, year 2, we take 18,000 times 50%, and we get 9,000. Accumulated depreciation is 18,000 plus the 9 for 27,000, and the remainder of 36,000 minus 27,000 is $9,000 book value. Okay, that would become the beginning book value for year 3. All right, activity-based. Okay, activity-based is based on usage. Okay, so at the beginning, when we first purchase the item, okay, we're going to determine approximately how many miles. In this case, it could be, if it was machines, it could be machine hours. If it was a plane, it could be flight time, whatever. Okay, whatever the activity is, we're going to determine an estimated amount at the beginning. Okay, then we take the beginning or original cost minus the salvage value. Okay, so we did that above in the straight line, 29,600, and we divide by the estimated amount of units, in this case 148,000 miles, and we get a rate of 20 cents per mile. That rate is used for the whole life of the asset. What we use it for is we take the actual miles that were driven at the end of the year. In year 1, that's 40,000 miles times the 20 cents per mile. Depreciation expense is $8,000. Accumulated depreciation is $8,000. Book value is the original cost minus the $8,000 Book value is 28,000. Second year, miles used 46,000, same rate 20 cents per mile, depreciation expense 9,200. Add that to what we had in accumulated depreciation. Accumulated depreciation goes up to 17,200. Book value is the original cost minus the 17,200, which gives us 18,800. Now, this is similar to the inventory costing methods in that a company can decide which method they want to use. Okay? Straight line is the most used simply because it is simple. Double declining balance is often used for tax purposes. Why? Because you take bigger deductions in the early years, which makes your net income less, which makes your taxable income less. Okay, and yes, you can use different methods for GAAP financial statements and for tax purposes. Those are two different things. Okay, activity-based is often used with things like vehicles or machines that you can estimate the usage better than the how long, time-wise, it's going to take. Now, declining balance and activity-based are more complicated. However, you can set them up in a spreadsheet and it does all the calculations. So if the company decides they want to use one of those, it's not that difficult to set it up. Thank you.